In this presentation, we will enter bills and then pay bills. In other words, we're going to be entering kind of like the standard bills you would think at the end of the month to have, things like the utility bill and the phone bill. We'll be entering them in bills first, then we'll be taking a look at the pay bills function. So they'll be going in as bills, entering expenses, the other side going to accounts payable. Then we will pay those bills, lowering the accounts payable and paying them out of the checking account. Here we go with Xero. Here we are in our Get Great Guitars dashboard. We're going to start off by opening up our trial balance. We're going to go to the accounting drop down to do so and go down to the trusty trial balance. Once that opens up, we will right click on the tab up top and duplicate it. So we're going to duplicate the trial balance. We're going to enter the information on the left. We're going to have our report, the trial balance, on the right. Then we're going to be changing the dates because we're going to be working in February now. So I'm going to select the drop down for the date and bring that out to February 19th. We will then update our report here. Now let's take a look at our flow chart. I'm going to go bounce back over to our flow chart. This is in QuickBooks Desktop. We're just looking at it for the flow chart purposes, however. So we're going to be entering bills and then paying bills. Now, if you think about bills at the end of the month, like the telephone company or the utility bill and whatnot, you may simply just pay those bills by check or have some kind of electronic transfer. However, it's useful if we have those bills right when they come in to enter the bills into the system at first, because that way we're going to get them in the system closer to the point in time that typically is the point in time that we had the service being input. And we might use that system as well for a way to kind of help us to sort the bills, sort when to pay the bills within the bill pay system, and to help us to print those bills if we're going to be printing them with checks. That's going to be the process we'll do now. We're going to enter these transactions. We're going to enter them as bills. We're going to see them appear within the bills section. That'll increase accounts payable. It'll increase then the related expense if we have expenses, if they are expenses, which typically they will be. Then the other side will be that we will pay the bill, decreasing the checking account and then decreasing the accounts payable. Let's take a look at it. We're going to go back over. Then we're going to go to our trial balance to do this. So we're going to be in our trial balance. Going to go up to the little plus button for the drop down, and we're going to be entering a bill. And the first one's going to be to Verizon. Now this is the second month of operations for us, so we paid Verizon before, and we want to show this on the second month because it can make things easier, of course. If we have a question about something, we can always look back to the prior month to see what the settings were and who we paid, what the vendor was. The vendor should be set up, and what the related expense account should be. We're going to put this in place as of the end of the month, so I'm going to say February 29th in our case, and then the due date I'm just going to say is March 31st, and then I'm going to make this a little bit smaller so it'll fit on a screen here. Then we're going to say, I could put the description, which might be the period that the phone bill is covering, and then we will put the amount. So I'm going to say 1 and 365, and then the other account's going to be to the telephone company. So telephone company, telephone. Now we should have set this up already, and if we have any questions, if it's not the first month of operations, then if you have any questions about the account, you could basically look at the prior account where you have selected this vendor and basically use the same thing. We want to be consistent as much as possible. So now instead of saying just approve, I'm going to write another bill. So I'm going to go to the drop down here, approve, and add another. The next one we're going to say is a new vendor we haven't had before, and that's going to be Spectrum, which is going to be, we're going to say that's our cable company or the internet company. And I spell that right? Spectrum. Doesn't really matter. It's a made up company name. So we're going to say new contact. That's going to be for the end of the 29th of February. Due date, let's make it March 31st. And then we're going to say that this is going to be, again, you might want in the description, the period covered might be useful. I'm not going to put it here. $180. Now we might want to set up another account. Now this could be, once again, in the utilities account. You might say this should be in the utilities. I got the phone, I've got the electric, possibly the gas, maybe the internet or the cable coverage in electric as well, or in utilities as well. I'm going to put it into cable, and I might better call it internet expense or something like that, but I tend to mix up internet expense with interest expense. Like I just pick those two up when I'm recording them. So I'll put it into cable, so I'm less likely to do that. And the expense category that we're going to have, let's put it in the 6153. 6153. So I'm going to add another one. And I'm going to say this is going to be 6153. And I'm going to say this is an expense type of account. So we'll say this is going to be the type of account of an expense. So where is the expenses? It's going to be the expenses down here. I'm just going to make it a normal type of expense type of account. Cable. And that looks good. So I'm going to go ahead and save that. And so there we have that one. We're going to do another one. So we're going to select this drop down and we're going to say approve and add another. So the next one we're going to be writing is to Edison. This is going to be our utility bill. So I'm going to write this to Edison, who is our utility company. And we're going to say Edison. We've written a check to Edison before. So if we have any questions on who Edison is, we can always look up the vendor account and see our prior transaction to this particular vendor. And we're going to say this is on the 31st. And you could put the description once again for the period that is covered from the utility. I will not do that here. We're going to say this is 648 on the utilities. The account then being utilities. This is one we set up last time for utilities. If you want to break out basically electric and gas, you can do so. I'm going to basically put those two together and call those the utilities. Now I'm going to go down and approve this one. This is going to be our last one that we'll take a look at here. Then we're going to go to the trial balance. So let's just make sure it doesn't do anything funny. Everything looks good. All right, let's go to the trial balance tab, our second tab. Let's update the report. I don't work with downdated reports, only updated reports. And we're going to go to the accounts payable. So accounts payable should be increasing by these bills that we have been putting in place. We haven't paid the bills yet. We just entered the bills. So the increase should be here for the end of the month on February. There's our our items. So we have the Verizon, Spectrum, and I do not see Edison here. So I'm going to assume, well, is this a date problem? Did I mess up the date? Because that's usually what happens when something gets messed up. So I'm going to make a later date here, and I'm going to say, let's take it out through March and see if I put this in there possibly as of the wrong date. And we're going to go, there it is. And yeah, it's in March. That's not supposed to be. So let's go back in there and see if we can adjust the date. See if the Xero system will allow us to make that adjustment. So if I go into the bill options up top, I'm going to say edit, because I'd like to fix that completely intentional mistake so that we could see how that might be done. And then we're going to bring this on back to the end of February. And that's good. And then I'm going to update this. So there we have that. That should look good. Now let's go back to our trial balance. I'm going to have to select the drop down again. Go into the trusty trial balance, the TB. Change the date up top. We're going to go date, bring it on out to February. That's the month we're working on. And then we'll update the report. So the report now is up to date. We're going to go to the payable. Let's go back into that accounts payable and see if this shows up in the proper time period this time for Edison. So increasing the Edison. If we go on down, we should see then the increase for Edison. So that looks good. Now I'm going to go back and let's just take a look at, since we're entering the payables, a report that should be supporting the payables, right? And that's going to be the aging detailed report. So if I go to the first tab, I'm back in the first tab. I'm going to go to the accounting drop down. I'm going to go down to, let's take a look at the reports. So we'll go into the reports tab. We want to go into the purchases and let's go into the aged payable detail. Aged payable detail report. And I'm going to make this as of February the 29th, so the end of February. And then if we scroll down, we have now Edison here. We have the Epiphone, the Spectrum, and Verizon, totaling up to $2,393. If I go back over to the trusty TB, there's the $2,393. I'm going to go here. I'm going to right click and I'm going to duplicate this report. Then I'm going to go back to the left tab and let's take a look at the income statement as well. So we have expense accounts, so we want to look at the effect on net income. So I'm going to go to the accounting drop down. I'm going to go to the income statement, then opening up the income statement. Let's right click on that tab up top and duplicate the income statement, pulling that to the right as well. And then if we scroll on down on the income statement, we could see these items that have been affected here. Now we might just want to look at February. You can do that too. If I go up top and say, I don't want to see January, I just want to see February 1st through February 29th, please. February 1st through February 29th. February doesn't want to go back to February, but it'll work. February 29th, okay. And then we're going to go down. This is just the February numbers. So there's our cable, there's our internet, there's the telephone, there's the utility. We haven't paid these yet. We just entered the bill for them, accrual system, recording them at the point in time we enter the bill, not when the cash goes out. Now we're going to think about the cash going out. So if I go back to the first tab, go back to the dashboard, we're going to think about organizing the bills that are outstanding and then paying them. So we're going to go down to this section down below, the bills you need to pay. Let's take a look at those bills we need to pay. We need to pay these. So let's go ahead and do that. Got to do what you got to do on the bills. So we're going to go down and we have the awaiting payments. There's 4 bills that are awaiting payment. And then if we scroll down here, there are our bills that are awaiting payment. Now, like we've seen in the past, we could go into each one of these and pay them off. And there'll be a section on the bottom that we could basically pay them off on the bottom. Or we can check them off and basically pay them by check if we choose to do so. So that's what I'll do now. I'm going to say, all right, let's try to pay all of these. I'm going to check them off like so. So I'm going to check them off here, and then I'm going to go to the make payment. And I'm going to make payment with a check. So I'm going to imagine writing a check either in the system where I'd put the checks into the to the register to then print them. So if I have these checks, notice they're going to be populating in this fashion. I want it to come out of the checking account, however. So if I go to the checking account, notice the check numbers are populating for us. Basically, they're auto-populating. Even if we're writing checks and we have a pre-printed check, we're going to have to put into the printer and print them. We want them to, the pre-printed check should line up with the auto-populated numbers over here. So then I'm going to say save and print as PDF. What's this going to do? It's going to decrease the accounts payable, it's going to decrease the checking account, and it'll decrease the amounts owed to the particular vendors, which is basically the supporting documentation related to the accounts payable. So let's go ahead and say save and print as the PDF. And here's our PDF form. And if we were actually going to print these checks, then we could put them into the printer and we could use this PDF form to print them out on the pre-set up checks. And that means that it should all line up in that format. So I'm going to close this out, and then I'm going to go back to the prior tab. And obviously now we only have the Epiphone that still hasn't paid. Poor Epiphone, we haven't paid. That's been outstanding for a little while here. And then if you go to the drop down up top, if I went to the business drop down and go to the checks, we're going to have the list of checks that we have paid, and we could select them. If we said, oh, we didn't print them last time, we had the Spectrum, the Edison, and this check. So if I was to say, hey, I want to send them to the PDF printer, so there's our 3 checks in the PDF printer, and here they are, and they generate these in order. So as you can see there. So I'm going to close this back up, and let's take a look at our reports now. So I'm going to go back to the trial balance. Let's go up back on over to the TB. Let's update the trial balance. We should then see a decrease in the checking account. So checking account should now be going down. Let's check that out. Let's check out. Now note, I put them in there as of February 1st, and I was going to put them in there as of the end of the month, the 28th, but they're in the proper month. So I'm going to go ahead and push forward with it. So we have the items paid for Spectrum, which was the 180. And then we had Verizon, which was the 365. And then Edison, which was the 648. So then if we go back up top, and go back up top, and then go into the accounts payable, we're going to scroll back down and look for that liability account in the accounts payable. There it is. Now again, this will look a little bit funny because we entered the bill at a later point than we paid the bill, so that's going to be a little bit backwards, but just note they're in the same month, so it should be okay. So here we have the payments for Spectrum, Verizon, and Edison decreasing the accounts payable, and then the bills down here, Verizon, Spectrum, and Edison. We're left with just that 1,200. If I go back to the trial balance and I go to the aged payable report, if we go to the aged payable report and update this, what's going to happen is these amounts are going to disappear except for the one for Epiphone. That's what 1,200 should be remaining. Let's go ahead and do that. Let's update this and get a report that's up to date. There it is. There's the 1,200. That should support what is on the trial balance. So if we go to the trial balance, back to the trial balance, then there's the 1,200. No effect from the second transaction from the payment on the income statement, right? If we go back to the income statement and were to refresh the income statement, there's no update since the point in time that we entered the bills, even though we paid them at now. You know, there's no change here because we recorded them into the income statement at the point in time we entered the bill, not at the point in time that we paid the bill, not at the point in time, in other words, that we entered the check. That's going to be it for now. Let's get out of here.